The Nifty opens at a fresh life high for the third straight day. Although indices give up majority of the opening gains, metals and realty surge while IT and consumer durables lag. It's the mid-caps which are outperforming today.
Gland Pharma enters into an agreement to acquire CDMO player, that's sensex Group, for around 120 million euros. The company says that there is no communication of the parent person's possible stake sale in the company. The stock is lower though, as the acquired asset is margin dilutive.
The Inox Group cuts debt across all businesses. Inox Green repays 250 crores. Inox Wind pays 161 crores. The group also says further debt reduction is underway in both the companies.
Big block seen in Zomato, 3.5% equity change hands at an average price of around 64 rupees per share, with Alibaba likely to have sold part of its stake in the company. Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me is Mangalam Malu. Well, Mangalam, it seems that the markets are facing some bit of resistance at around that 18,700 odd mark. And, earlier today we made that point that maybe we could brace ourselves for a bit of consolidation and maybe some mild correction as well. And from the day's high, actually, we have come off. The Nifty Bank, well, that's moved into the red already as we speak. The IT index as well, that's trading in the red. So both the pillars of the markets are under some pressure. Let's see how things move. But if you want to pick up a bright spot, I guess it'll have to be the broader market performance. You still have more number of stocks that are advancing than declining. But at the end of the day, we'll have to track that and see whether this can be maintained. We have to, Nigel, and that really is the story of the day. More number, way more number. We have almost 1,900 stocks which are in the green for about 900 which are in the red. But, towards the end of yesterday's trading session, this number actually moved in favor of decline. So this is something we will monitor even as we consolidate around the frontline spaces. We do have a bunch of cash stocks which are doing extremely well. Five-Star Finance, of course, reported numbers, a big move on there. That stocks moved to the high point of trade. We had the management here on CNBC-TV18 as well. Kalyan Jewelers, Lemon Tree Hotels, all of them are actually buzzing around. TCPL Packaging is the other one, which is up about 39% this month itself. So big movers in the small and mid-cap space. But what can we say about the index, which is currently consolidating? Let's welcome Ashish Kyal. Ashish, your thoughts? I mean, we have been notching record highs, but it's been more of a buy and hold market than, trade the intraday market sort of thing.
Hey Mangalam, morning to you and all the viewers. Yes, absolutely. See, the overall trend for the market is positive. That is what we can say. And it's a buy on dips market. So someone who is trying to catch a breakout, you can see that it goes up and then consolidates or shows some kind of a dip. That is what we saw even in the final hour yesterday. But the overall sign is very healthy as of now because we are seeing a rotational buying. It was PSU banks which started the rally. Then we saw the Reliance, the big boys catching up, Reliance catching up. Then we saw HUL catching up. And today the metals and auto sector is showing some positive signs. So it's a rotational rally, which is a healthy sign so far. Mid cap and small cap indices has a lot of catch up to do. They are still, I think, down by around 10, 15, 20% from the lifetime high levels. Having said that, I would be buying this market. I would use dip towards the level of 18,590, 18,580 as a buying opportunity for the target of around 18,800 on the upside, where there is again resistance level as well. As long as 18,500 remains intact on the downside. So this is buy on dip. I would not buy the breakout. I'll buy the dip.
Oh, okay. All right. Thanks a lot, Ashish, for stopping by and filling us in with your take on the index. But let's shift focus, I think, to